Hi, this is Mark from ValueCharts.com. Let's take a look at gold. We looked earlier today at a possible buying opportunity here at moderately undervalued on a 60-minute bar basis, expecting the gold market to rally up here, potentially to moderately overvalued. We didn't quite get there. The market actually reversed down and stopped us out from our low point here of 1668. So we didn't have to risk a lot on that trade, and that's one of the benefits of value trading, is that we can typically identify strategic entry and exit points, especially the entry points where we just don't have to risk a lot on certain trades. This market to me looks like it's probably heading down to test the key support level, which is now support, which represents this trend line that we recently broke out of about 5 days ago to the upside. So now I wouldn't be surprised to see gold go back down to test this trend line, which would take us right down to the 1625 level, if you will, and then possibly at that point in time we could be looking at an excellent buying opportunity. So the low of yesterday is 1665.10. I would say a breakdown through 1665 might be a good sell signal, or we could even look intraday and possibly find a short-term overvalued, even moderately overvalued point on a 15-minute bar basis, which certainly the last moderately overvalued levels were attractive selling points here, and I would expect to see plenty of those on the way down if we start to see the follow-through to the downside. There again, initiating our trades at value trade origination points is oftentimes a way to reduce our risk. And in this particular case, we were trying to look for a buying opportunity in the 60-minute charts. That did not pan out, which is going to be the case many times as traders. We're trading the probabilities, not the absolutes. So we have to be prepared that a good majority of our trades that we're going to put on the markets are not going to be profitable. So just to follow up on our earlier trade, we're not looking to buy this market anymore. We placed a tight stop in the market, so we're not in bad shape at all. Ready to live for and trade another day here. And in my mind, the gold play now is to the downside over the next several days. So we'll keep on watching this market and potentially look for some good trading opportunities. One quick note to add here is that we're seeing the declining momentum here. So from that standpoint, this was a trade that to some extent did not have the momentum confirmation that we ordinarily would like to see in a trade. And then the other thing I would say is looking at the MQ migration indicator that's down here below, we're basically seeing a weakening, if you will, the buying pressure or buying strength, and then we're once again returning to selling strength. So that oftentimes is indicative of a market running out of steam to the upside and starting to head down to lower levels. But we'll watch this market. And the key is that regardless of our general direction in which we want to trade a market, we're interested in strategic entry points. And we're certainly also interested in having some sort of logic to be able to manage our trade by. And I like to identify strategic entry points with either value most of the time and with momentum sometimes, but usually momentum I use to spring out of trade origination points based on value. So we'll continue to watch this market. I'm looking for a good short selling opportunity here in the next couple of hours, and we'll see where this takes us. Have a great day.